A very good morning, everyone. This is Admiral Markets. My name is Chris. We're going to take a look at the Forex market as always, of course. Thank you for joining. We're going to take a look at this, first of all, PowerPoint, explaining that the material here is intended for a global audience. Please take that into account that it may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, very important to say here is the fact that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. By continuing watching this webinar, you agree with this disclaimer and the content of it. Good. Thank you so much for your attention. With that said, we're going to be taking a look today at price action at support or resistance. All right, now to decipher whether the market is an interesting position to trade, we can still use this module. Defining the trend, looking for opportunities, checking if there are filters, establishing what the trigger is. Trigger is basically when we have more heightened interest in a particular setup, and then of course entering makes it a trade. Normally we use fibs, trend lines, moving averages, and oscillators to decipher and to understand the market structure. Today we'll be specifically looking at candlesticks close to support and resistance. The support and resistance could of course be various things. It could be a pivot point, it could be a trend line, it could be a fib, it could be a moving average. Some of them are dynamic. A moving average is a dynamic support and resistance, and a trend line or a horizontal trend line, for instance, is a static support and resistance because it doesn't move. Pivot point is static because it's always the same level, although of course from day to day it changes, but during the day it wouldn't change. So we'll be looking at candlestick patterns at support and resistance for today with the main focus. Make sure to take a look at Admiral Markets and social media. And with that said, let's start over here to take a look at what's going on regarding our Forex calendar. Doesn't seem to be working. In any case, here you can see that tonight we have price action trading, part 4, session 2 with Nanette. Tomorrow we have Fibonacci and wave trading, and in the evening we don't have anything actually because we had yesterday evening we had the Pro Learning Lab webinar on finding a right match with your system. But in the meantime, I would like to see the calendar, which doesn't seem to be working for me. Does anyone else have that problem by any chance? Or is it maybe on my end? I'm not sure. Well, in any case, let's move on. Strange. In any case, let's take a look at the charts now. And let's take a look at this view. I think that today Yellen is testifying, if I remember correctly, or speaking, if I remember correctly. Let me double check that. We have claimant count change today, by the way, on the pound and unemployment rate. So the pound is going to be very volatile throughout the morning, or at least we should count on that. Throughout the day, we also have Bank of Canada rate statements. So the CAD is off for me. They also have a press conference and monetary policy statement, etc., overnight rate. And Yellen is speaking, plus the Bank of Japan governor is speaking. So that's all today, by the way. Now let me see, open your question box. Sorry for this delay. All right, good. Good morning, Mike. Good morning, Hans. So with that delay behind us, let's take a look at what's going on with the euro and pound. Now the euro and pound yesterday, the euro bounced off the 50 fib, but also off of a monthly and weekly pivot point, the main pivot point. So no wonder there was a bouncing spot yesterday on the euro. We talked about that potential, and price fell to that fib and then bounced indeed off that. So that shouldn't be a surprise if you were in yesterday's webinar. This fib here, we said that there could be a smaller fall upon the break of this trend line here to that level. However, we never got the hook back. As I said, that would be nice if we got the hook back. We didn't get it though. Then we did bounce off the 50. We went to the 50 fib and then bounced off it. Right? We talked about it yesterday. And it was a small 25 pip fall, and then we bounced off that fib, and that was the end of the trading day. Trading days can go fast. Before you know it, they're over, and nothing much happened. The euro dollar, nothing really much happened. Small fall, bounce off the fib, Asian quietness, that's it. End of the day. Unfortunately, not much movement, and the average daily range here on the euro dollar, very small, isn't it? So, will we get follow through today after that 50% bounce, or are we going to see a break down to the 61.8 fib? I would say that's the main question. Both are possible. You can keep an eye on a trend line, for instance, like this, to keep an eye on what's going on here, just like we did yesterday. The upside will be also just as valid, maybe a trend line like this, connecting these tops. So it seems to be we're in this consolidation looking at these particular trend lines. So what could be, as you know, we're looking at price action, support, or resistance. So what could be a trade if we see, for instance, a 1 hour candlestick pattern like we said yesterday, for instance here, we saw a bullish candle at the 50 fib. Something like that at the 61.8 will be still valid. Other than that, a bullish candle going, an hourly candle going through the resistance line could indicate the breakout, right? One thing we want to keep an eye on is how the 1 hour candle is breaking through that trend line. If it's with a strong close, if it's a strong candle, that's a sign of a good breakout. If there's a massive wick on this breakout candle, that's not so good of a sign. It could still get follow through. I'm not saying. It could just be some exhaustion within the hour. But you know, there's a bit more risk involved in that. Could still get follow through though, but it's not as nice as a good breakout candle. If we get a good breakout candle and we get a retracement of that candle, that could be a very good bouncing spot for more upside. So if I look at support and resistance, I would say that these trend lines are key. Moving averages are flat and all intertwined on the hourly. So there is a risk there that the breakout will get a hook back. No matter which side we break out to, we could probably see that hook back. But if I had to choose important support and resistance levels, I would say these trend lines at the moment. Let me actually go to the Camarilla indicator here. 1 second. Let me put those trend lines on again. Like this. Let's take a look at where the Camarilla is on the 15. No, it's not showing. Why not? Strange. Maybe it's just a template. 1 second. There it is. Okay, good. So what do we have? Well, we have an H4 long breakout at 138.37, which makes sense according to the trend lines we drew, because we're saying we need to break up this purple line. Basically, when we break the purple line, we're pushing through R1, and the Camarilla is saying the H4 is just above the R1, which makes sense to me. So there's confluence between the pivot points here and the technical trend lines like this, and we have a blue gap there to trade. Now we could see first a break, pull back, and then go, which is even better because then we broke above it, and then we have even more space. Then we have space from the trend line up to the H5. That makes sense. L3 long at 138.01. That's actually along upon the break already of this trend line. So we want to be careful of the trend line break to the downside because we still have strong pivot point here That could be a bouncing spot still, the pivot point right in the L3. You can see that the Camarilla is saying wait for the break of the bottom before trading it to the downside basically, and then trade it to the 137.70. So let's take a look what the HL5 is in terms of fibs. So if we put a fib on this upside as we had, the 61.8 fib is at 138.70, sorry, 137.60. And that's just a tad lower than the L5, which makes sense. So basically it's saying, the Camarilla is saying break the bottom and we have a trade roughly to the 61.8. Which makes sense. We were seeing the same. We just saw the break maybe a bit earlier, but the target was the same. The break to the upside, we saw the same as well. So that's the playing field for today, I would say. That's today's playing field here on the euro dollar, waiting for a break either way, either as a continuation of the 50% bounce or a bigger retracement to the 61.8, and then the bounce will happen maybe tomorrow. Let's take a look at the pound dollar. Pound had a massive move up here from the 61.8. Big bounce. Was looking today for the hook back. Doesn't seem though that we're getting that. I had the entry order at 06 right here in between the pivot and L3 long. And unfortunately it doesn't seem like we're getting that far. We had a massive move up, a good fall down to the 61.8. First at the 50 fib. Right, we saw that yesterday happening to the 50 fib. That could have been the bouncing spot, but we got one more follow through to the 61.8 fib. Then bounced massively off it. Then had some smaller break, but it was already reaching London close, so didn't expect much of a continuation. We had the Asian consolidation. I was hoping myself for a small dip and then rise like this, but it doesn't seem like we're getting that at the moment. Still pushing forward. However, mind you, we're very close to yesterday's high. That could still be a resistance spot. I was anticipating a dip here, but doesn't seem we're getting that. It's a pity, but we'll have to adjust my plan accordingly. Not now, though. We're still at yesterday's high. So we are getting, though, in general, before I move on to this specific spot or point, we are having an impulse here. We had a retracement down to the 61.8 and a very strong bounce. Why would I say strong? Because look at the hourly candle. Huge wick, huge size, closed near the high. That is a price action candlestick pattern at support as well, at the 61.8% fib support. That's a classical candle price action signal. It's actually wonderful because it's that powerful and that big, which actually gives more confidence in trading it in general. We also broke out of this corrective trend line here and broke hook back, I was hoping that the hook back would go a bit deeper, but it doesn't seem so. So that happened yesterday. Right? So hopefully you were well prepared for that after our yesterday's analysis. In any case, today the daily high is very close. So I need to see break of that daily high. I need to see some stall after that, some pause, and then the next break would be good for me, in my opinion, on this 50-minute chart, with some breakout trades, pretty big spaces here on the pound dollar. H5 pretty high. So could be a trending day maybe. Maybe not so much of a ranging day. First though, we need to break the H3 in the top, yesterday's high. So that's priority number one. Other than that, because if we don't break it, although it seems likely at the moment, you never know. It could, either it doesn't break and still makes some correction, or if it does break, it will probably only break by about 8 pips before it makes some retracement. I'm looking for the follow-through, not the first break, especially on the pound dollar, especially at this time, because a break of 8 pips of this high is likely going to be a resistance anyhow. All right, so bullish structure, bullish bounces today, looking for bullish continuation. The question is the timing. The timing is not correct now. I'm still leaving the pen order here. If we break the top, that doesn't seem likely though, then we'll have to adjust it. Look for a pullback and looking for the continue in that case. From a bigger perspective, what's happening basically, is prices had a pin bar here, 4-hour pin bar as well. Not only 4-hour, but daily, massive wick here at the bottom. And well, we were prepared for it, right? 1561.8 yesterday we said our bouncing spot, so that's not surprising. We're close to getting to yesterday's high, as I already said. Looking at that daily candle, you can see the high, right? So we're getting close to that. We have to wait for a break of that for maybe a trending day to the upside, right? And we could maybe expect today to end up, I don't know, somewhere at 167.80 or something like that. You know, that could be the potential here, 30, 40 pips above this high maybe, right? Something like that. Could be more, could be less, but probably a bit more maybe. Depends. But you get the point. We're looking, basically, this is a bullish signal. Also, looking at the whole setup, we retraced this wick, we retraced this bullish candle. Everything is aligned to the upside. We're an uptrend, 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 uptrend. This was a dip to find buyers. So intraday also, it's looking so at the moment. But not interesting right here, right now. So if you have any questions regarding the pound, let me know. The moving averages here are all the time the same, no matter what time frame, in fact. So I will tell you these are the usual 34 EMA, the 144, no 136, sorry, 544. I'm writing it down. Odd USD. Let's see. Odd USD had a bearish day yesterday, so that definitely looks differently than the euro dollar and pound dollar. Not to say that necessarily this is in a downtrend, but it had a bearish day within this uptrend, so we're getting some correction retracement. This was a very strong AO reading, but we are seeing some topping point here at the moment, so we could see this go back down to the zero line, which could mean that we could see some potential correction. We could still see one more upside before we get the bigger correction, by the way. That could happen as this goes down and we get one more bump up. Price could follow like this, and then we have divergence, and we should see a bit of a retracement like that. Okay? Something like that. So still could see the break of the top. For instance, on this 4-hour chart, we could maybe see one more push up to break this top to get a second divergence, a double divergence, maybe even a triple divergence before we get the bigger correction. Doesn't have to. We could still remain in this zone for longer, make some correction like that, and eventually maybe still bounce when the daily gets to the zero line, for instance, although that's a pretty long process. So we'll have to see how price reacts to this zone. In general, though, if you look at this 4-hour chart, we're in uptrend, but due to the divergence, there is a potential for some stalling spot here, as we saw yesterday. So one way of knowing how far it could go is taking a look at this hourly. And yesterday we had, or today actually, we had a bounce off the fib. If you wonder where a reversal can continue, put a fib on the very first swing high, swing low of the correction, and take a look where the minus 272 and the minus 618 targets are. Yesterday we had a bounce, a double bottom at the minus 272. Would that be the bouncing spot for upside? I don't know. At the moment, if you're in that trade, move it to break even, because we could see maybe a bounce at the spot, but maybe we don't get the follow through and we still see one more fall down to the minus 618 and the L4 before we see another bounce. I wouldn't be surprised personally to see some follow through still to the minus 618 and then a bounce at that level. All right. In general, though, that's definitely retracement because this is up. So it's not really a great currency at the moment. If we look at the 50-minute world, not at the higher time frames at least. 50-minute world, let's take a look. what's going on here. There could be some downside trade if we break, for instance, this bottom. There could be some trade here between the minus 272 and the minus 618. It's a small space. If we break the L4 and the minus 618, it could be another target down to the minus 1000, some extension potential. Depends how much we bounce at the first target. Whether we get that extension lower. The upside doesn't seem likely at the moment because although we are in a strong uptrend, the 15-minute world and the, let's say, hourly world are not in an uptrend direction moving down. So that doesn't seem too likely, but maybe above here, as you see, when you get above that triangle, there could be some space to the upside. But that seems quite unlikely, although we can always keep an eye on that, of course, as we move along throughout the day. Alrighty. The yen pairs were moving a lot this morning. Throughout the Asian session, let's take a look. Let me refresh this template here. One second. Let me just replace this. Okay, good. The yens were a good trending cross this morning when we saw the basically break through yesterday's high. We saw some breakout follow through above that, but we're not following that much through. We're getting some resistance here. Same for the euro yen. Was a good break of yesterday's high somewhere here, I think. And we see the moving average is very steep here. Got some follow through. So that's basically, in my opinion, not so interesting anymore. I mean, that breakthrough already happened. So that's a pity. If you took those breaks, maybe you have some profit already. But otherwise, I don't see much follow through. I don't like the yens in the long-term perspective anyhow. From an intraday perspective, we saw some good run up on most yen pairs. So, but that was throughout at the end of the Asian session. So the yens are still not that interesting at the moment for me right now, right here. So let's hunt for something that is interesting, as Hans is asking at the moment. I'm not too sure, to be honest. I think the pound is the most interesting. That's something already we discussed. The euro upside is something I find interesting. And the pound probably. The euro and the pound dollar upside is so far the most interesting. I'm not that interested in the odd because it's a retracement. Not so interesting in the Kiwi because this is an uptrend but making a retracement down. Not so interested in the yens because they already moved their intraday move and it's not that much trending. So those are out. So to be honest, the ones we discussed at the very beginning, the euro dollar and pound dollar, seem the most interesting to me. The ones we discussed at the very beginning. So because those have made a good retracement, they are in an uptrend. They made a good move down to the 50 and the 61.8 fib. The euro has monthly, weekly pivots here acting as support. Daily pivot here, so all kind of pivot levels below it here. I mean, below it at the moment. So in that regard, it makes sense not to trade short maybe below here, below this trend line because there are a lot of pivots there waiting for the bottom break. And to me, it looks bullish. So I'm expecting a break. And let's see if we get that confirmation. Same for the pound dollar. I'm expecting a break and continue. I already expected that yesterday. Therefore, I had a pending order here. But that seems to be at a tough level at the moment to expect to get an entry. I wanted to get in on the pound dollar at 167.06. I'm not sure if that's likely. We do have a pound news event, so that could still send price there maybe. I would have a stop loss below this bottom here. It's about 50 pips. And I'm trail stopping the 1 hour world. Now I already have bottoms here, so I think I would have to adjust my plan to potentially buying it at a different spot. Not right here though, because we're right at yesterday's high. And at the H3 short. If we do break those levels, I'm not entering. But I would wait for a pullback here, and the next continue, the next break of the next fractal on the 15 is something that or bounce, would be something I'm interested in. After the break though. But I need the break first, and then I hook back, and then I'll take the continue or the bounce. If we don't break, I'm not interested because that's buying very too close to resistance. So then I still just waiting to see if my pending order can get filled. If not, I'll have to adjust my plan and buy it higher after the break, kind of. So that would be the battle plan here from how I see it. So I would have to then adjust. I can't keep that pending order here forever. Otherwise, market move away from me and wouldn't be too realistic. So I would have to adjust that. I like the pound dollar a bit more than the euro dollar, but the euro dollar, as I said, is also pretty interesting upon the break. Moving averages are flat, so here I wouldn't take the break itself, but we're waiting for a break, pullback, and go as well, personally. Let's see. Yeah. Let's see if there's anything else. Let's take a look at the dollar CAD and the dollar SPICY. Maybe those are interesting as well. Dollar CAD made a good run up here. So it's a good question, Hans, where to get in. Sometimes maybe I'm a bit long drawn out in my answers, and the point in the info where I maybe would actually trade it is missed. So if anyone has doubts about if I want to trade it or where I would trade it, by all means ask me. I'll try to keep it more to the point, but sometimes I elaborate maybe on things and then the message is lost. So it's always good to follow up if you have doubts. Let's see. This is looking more like a rising wedge to me, which is a bearish signal in the sense that rising wedges are a reversal pattern, not a continuation pattern. Also, price is moving towards the moving average, which in general still means that we are in a retracement. Now we know that the daily chart is still has an upside potential still, but this was a very strong fall within that upside, and we moved back all the way to the blue medium moving average on the dollar CAD on the daily, or the long-term one on the 4-hour chart, which are roughly equal to each other. So that is basically the story. We have the upside here on basically on the longer time frame, but a very strong retracement within that long term, and then a kind of half-hearted bounce. So it's quite a mixture, as you can see, right? Which is the trend now? Is it that stronger blue here, or is that stronger green, red? It's too much of a mix. However, looking at the more intermediate time frames, this is still a lot of momentum, and a rising wedge here not getting much of confidence. We could say that there's potentially maybe 5 waves in here. I don't know. It could be a leading diagonal type of pattern, for instance, which means that however we look at it, even if this is 5 waves, that we should see some fall towards support. And then maybe see again a bounce up here again, for instance. So even if this is bullish, right, a bullish start of the reversal, one would expect still a retracement of that before continuing up. Or in the other case that this is just a correction, this upside is just a correction of downside, then we would expect even more downside. So let's take a look. We have a pivot point already broken. We have let's see, where's yesterday's low? Yesterday's low is about at the L3 long. So how much space do we have to yesterday's low and L3 long? Upon the break here, we have 12 pips. Break of this fractal is 12 pips. Versus about a 12 reward. It's dodgy. Personally, I like the short, but I want to see it move down a bit. I want to see some action here. I want to see it fall and then make a bounce and then continue to break. Then it would be interesting. Preferably just a break, small break through the L3 and daily low, then some hook back, and the next break would be perfect, or better. Because at the moment, I'm still cautious. This could still be some kind of descending wedge, and if we break the top before you know it, you're back in this upside. Just because we broke through the support line here doesn't mean anything as yet, because we broke through it passively by going sideways, which is a break, but it isn't a full-fledged impulse break. I want to see impulse in the market. I want to see momentum in the market before I would trade a breakout like this. But it is looking bearish. Certainly. No, it wasn't directed at you, Hans, by the way. It's just my reasoning. It wasn't intended to be a reaction to your comment there. Hans is saying that the dollar CAD is looking very good to short, and I agree. Dollar CAD is a short. It doesn't look much like a bullish structure to me. We have a big wick here as well, so it's looking bearish. The only thing is that breakouts, especially if you don't have momentum as yet, because this is not momentum, are a bit more riskier. That's all I want to warn you of. When the moving averages are flat like this, what could happen is you got a break and a quick pullback to that same level. And therefore, it's less interesting to trade because of that. But once you have a good trending mode, then the follow-through is a bit better. Unless, of course, you position yourself in a different way and you're not looking for the breakout. But let's say it maybe hooks back, for instance, to H3 short, right? For instance, could make sense. Could be like a double hook back here. Then we have more space to the L3 long than upon the break of the support. With more space, with of course a tighter balance here. A better balance, sorry. So I think from my perspective it's definitely bearish. Just would like maybe to see it a bit higher or upon break pullback. Dollar Swiss is the same in a way. Dollar Swiss is also looking bearish. And dollar Swiss is looking just as interesting as the pound and the euro. So it's basically the dollar that, yes, by the way, indeed, before I leave the dollar Swiss dollar CAD, Hans had an extra comment here, I didn't see it only now, is that indeed the bearish wedge is broken, true, indeed. So there's a good chance of follow through, and indeed we're seeing the same, definitely looking bearish, just like the dollar Swissy. Also viewing bearishness, and basically it's boiling down to dollar weakness, I would say. I would say that today, if I had to choose anything, it's dollar weakness setup, in my opinion. At the moment, that's how it looks structurally. Looks like the best setup at the moment. So the dollar Swissy is the same. Now the Swiss franc, the dollar Swissy, if you look at its average movement, it isn't as much really as other pairs. The dollar Swissy here, pretty tight range compared to other pairs. So if I had to choose between the euro dollar, pound dollar, or dollar Swissy, or dollar CAD, it wouldn't be the dollar Swissy necessarily. I think it does look bearish though, although we just don't have much the same kind of movements. Daily range is a bit on the low side. Does look bearish though. The same structure in the sense that we have weekly and monthly pivots here as resistance. And we bounced off that yesterday. We bounced, broke a rising wedge already as well on the dollar Swissy. What kind of rising wedge? Let's take a look. Wait, let me put a different template here. Like this. Very funny rising wedge, but it is one. Broke it. Now I just got the Asian consolidation. This seems set for some good follow through, I would say. Price has gone back to the moving averages with means of retracement. It hit the weekly and monthly pivots right here as far as I remember correctly. Same story. Back to resistance. Back to the moving averages. Back to the pivots. Broke a rising wedge. AO back to the zero line. So that's confirming. Price is now trying to break through the daily pivot, so it's confirming. And a break of this fractal could already merit, in my opinion, the downside. Although it's early, we don't have any trend yet, we don't have any momentum. Why? Because if you look at our 2134, it's flat, isn't it? But this is looking bearish with a bearish structure. So those are what's interesting. Let's see if the other crosses maybe have some interesting setup. At the moment, Euro odd is the biggest volatility. That's the biggest range at the moment, together with the Euro CAD and the pound dollar. Those three are the number one. Number one is the Euro odd, in fact. Highest range across the board. Across the market, the daily ranges are quite low. Most of them are ranging from 70 to 80-ish, which is on the low side, especially for some yen pairs. That's pretty low. Euro pound and dollar Swissy are the lowest at the moment. Euro pound is not so surprising. So let's take a look at the Euro odd then, because that one apparently has the most movement. So let's take a look if there's anything interesting on that one. Hourly chart right here. Now we had a lot of struggle with the downside because there's a lot of divergence between the bottoms. You can see the oscillator. The awesome oscillator is already having that, right? But if we put an RSI on, for instance, we would say it would be the confirmation if you had any doubts. Here you can clearly see this uptrend here with the lows and price making lower lows, right? So definitely divergence, and we have 4-hour divergence, double divergence like this. What is the goal of that? The median moving average, right? It's coming in at about 149.20 at the moment. That 149.20 is roughly close to these tops. What does that mean on the daily chart? Let's take a look. We put a fib on this first downside here. Price seems to be poking through the -272 target, which is funny, but they're not getting follow through. The next one will be -618. Could still be a -272 bounce, although it's a bit awkward how much we push through it, but okay. The next fib we could want to use is this one. And that's a daily fib. And we can see that resistance spot about 149.70 is close to the 38.2 fib, 149.90. So we would probably want to keep an eye on 149.90. It's below the right below the 150 psychological number. It's a 38.2 fib, and it's also relatively close to the moving average we have here. Don't forget that moving average is more like a band. Remember that basically it's more like a band here coming in, right? So that'll be the higher part of the band. If I have it correct, 1 second. Yeah. Well, 38.2 is a bit above it, but that's okay. Can sometimes happen. So, in any case, it's roughly the same. The point is that, as we can see with the RSI and as we can see with this AO, is that we're bumping into a lot of divergence, which could see that bigger retracement. Yeah, well, it's not. It depends how you look at it. It could be good to trade still, but it's more of a reversal trade if you depending on what time frames you look at. If you look at the 4-hour, it's a reversal trade. If you don't trade reversals, it would not be in your scope indeed today. However, if you don't mind trading reversals, we could zoom into a lower time frame and try to catch this part of that reversal, because it seems to me that if we have a decent chance of getting up to the 149.50, 150 area here, let's play it conservatively, 149.25 up to 150, somewhere in that zone we're looking for price to get, right? 149.25, 150, 149.90 to be exact, between these red lines. So we could see price maybe go there. We also have double bottom now. And let's take a look at the daily. Engulfing daily twins, for instance, big wick here. So we got some price action signals at this support level. All right, so with that in mind, let's now take a look at the hourly. Now that we know what could potentially be happening on the 4-hour, let's use that info and piece it together on the hourly. We got a trend line here indicating resistance, or maybe like this even. Both are valid, I guess. Break of those lines would indicate the break of resistance and the potential for price to go up to those targets as part of a retracement, right? This could be the first part of the retracement, this could be the second, and then we get the third part of the retracement. Or for those who like edited waves, it could be something like called an A, B, C, which is a zigzag, right? So that's possible. At the moment, if you put a fib on this upside, we bounce off the 38.2. That's a very shallow fib. If we bounce off that fib and indeed break these tops, it would probably be a zigzag. The first target is minus 272. We should expect some pause there, maybe back to this spot, and then move up again. Something like that would seem likely. All right, but that's upon the break of this. At the moment, though, we haven't broken it yet, but we did get a bounce at the 38.2. We could still see some follow-through maybe to the 50 fib. Those could be still maybe interesting support levels to position oneself for that move up, right? That could be interesting. Now, will we get that low? I don't know. If we do, it could be something to think about. Looking maybe for an hourly wick or engulfing twins at these fibs, although they are a reversal trade, could have a decent expectancy if you look at the 4-hour double divergence and the potential for price to move into these gaps here to the upside. All right. Now, how about if we don't get that low, though? Then I wouldn't trade it here. I would wait for the break here. Personally, the break can only be traded on a very small time frame because there's only a small gap to the minus 272. From an hourly perspective, probably best to wait for the break and pull back before taking it up for this space. From an hourly perspective, I would want it here at the blue circle after the break pullback. From a 15-minute perspective, we could try to trade some trade within that blue zone here, in my opinion. I hope that makes sense. So the trades I see are reversal trades on the 4-hour chart are bounce trades at the 50, 61, bounce reversal trades at these fibs, or pullback trade on the hourly at this level, the blue circle, or on the 50-minute chart, a breakout trade in the green level. From a 4-hour potential, a 4-hour with the trend trade would be waiting for price to get into this zone for rejection for a short. So blue are reversal hourly trades, green are breakout trades on the 15, and red are with the trend bounces on the 4-hour chart. So I hope that's clear. I'm trying to, explain which time frames we best, in my opinion, what type of trade they are, and whether they're with the trend or reversal. Now, we don't know if of course, this plan would be modified as we go along. Maybe we don't get to this zone. Then eventually, doesn't mean that I'll never short this pair, of course, if we don't get there. I would adjust the plan. Let's say we hit the minus 272, bounce off of there, then show some weakness. We don't get followed through, and we make a higher low here, for instance. Well, then if we break this trend line, for instance, then I'm definitely going to short, right? Because then we didn't get to that zone. And then it just wasn't enough buyers to push it there, and then we'll have to, adjust it to the fact that price didn't get up to our target, but it's showing weakness, breaking support, then there's a likely with the trend setup. Okay, so with that said, let's move over now to the 50 and see where our Kimberella is. We got a H3 short right at here, double top. So there's that potential for a breakout trade above it. That's also yesterday's high, the H3 short level. We bounce off the pivot point here, and that's looking good for a 50-minute breakout. The only thing remaining for me, or the only thing that would stop me from taking it, is if this potential reward space, which is about 38 pips, if that would be less than the risk I'm taking. So what I need is to make sure that that red box is just as big as the blue box. At the moment, I'm not sure. Let me take a look. At the moment, the risk is 40 pips because I would put the stop loss at the moving averages. So at the moment, we don't have enough reward to risk. But as these moving averages climb up, and as soon as we get a fractal as well, that would be even better, that's closer to the top, then anything that's, let's say, this is a 39 space, but I'm entering a bit higher, of course, at 02, which means technically speaking, there's really about 35 pips. So if we get the moving averages within, let's say, 30 pips to this top, then there's enough R to R balance here. Now, mind you, it's not to say that I will necessarily take the profit here. In this case, I think actually I will use a trailing stop loss. Although I see this as potential resistance, I'm just measuring R to R up to that level. I'd rather use a trailing stop to exit. Why? Because there's a decent chance that price could hit that level, make a small consolidation, still continue. So I don't want to cut that winner short. So I'd just rather use a trailing stop. But I do want to measure if I have enough R2R space as a filter for trades, because if they don't have enough space, that's a way of filtering out bad setups in my strategy. So that's why. So there's a decent chance, though, as price moves along, that these moving averages are going to be higher. We'll probably see as price gets close to this one more fractal, one more dip down, right? As price moves higher, hits this level, probably make one more dip down. We'll get a fractal probably at around this level here. And then we'll get a bounce like this. We can use that fractal on the moving average just to hide that stop loss, and it could be something like 30, 25 pip stop loss probably. Then I'll trail stop every 15-minute fractal to the upside. All right, so that's the trade plan here. And the trading stop kicks in immediately as soon as the trade is entered. Every new 15-minute fractal is trail stop, just in case we don't get follow through and get weakness. Most of the time, I'm not exiting at -1, but I'm exiting on average about -0.5 with 15-minute breakouts like this due to the trading stop, which is great because that's a big difference. Sometimes even -0.4. And the average loss, reducing the average loss as much as we can is great because then, if we get plus 1.2 on average, you can see that the factor is 3 times as much, right? Whereas if we have an average loss of -0.8, that balance is reduced to 1.5. It's a tremendous difference. Pound dollar not moving down, keeping its head up here, I would say. What I mean with that is that despite the fact that it's close to resistance, it's not moving down. It's just going sideways. That's keeping its head up, which is a bullish signal because there's plenty of reason to make a dip down here, one would say, but it's not doing so. So it seems to be accumulating for breakup, but with the pound news around the corner, it's difficult to say if that will happen. How about the euro dollar? Seems like we're pushing through. Seems like we got that dollar weakness. Dollar Swissy is following as well. Dollar CAD is making one more push up instead. Seems to be a bit of CAD weakness as well then apparently. All right, so I hope that's clear regarding the euro odd. Maybe the pound odd is the same. I'm sure actually it is, to be honest. It has also a double divergence. So it could be very similar in its outlook. One thing we could do is take a look at the euro pound. How's that looking like? Difficult to say. Its price is at the pivot point. Let's take a look at the hourly. Hourly also doesn't give us much advice whether the euro or pound is stronger at the moment, I would say. Does anyone have a preference? To me, it looks quite messy-mashy, and I don't see any one of these actually being more likely to be a winner. So let's just take a look at the pound odd otherwise. And we know that we have double divergence. Same story as the 4-hour world here. Same story as the euro odd. Here too we have a resistance about a bit higher that could be acted or used as a TP or target zone. Here too we have a potential fib that we can put on. And here too we bounced off the 38.2 fib. Almost missed it by 2 pips. Here too probably we have a breakout above the H3 short up to the H4 long. Basically the euro odd and pound odd are very correlated in general. Let me take a look. Yeah, if you look at the euro odd compared to the pound odd and its correlation over a year, 6 months, 3 months, a month, a week, a day, an hour, only the week has a bit lower correlation. Otherwise, the euro odd and pound odd are extremely correlated. So it doesn't surprise me that both stopped at H3, that both have divergence. It's basically exactly the same setup here. Even on the hourly, it's a very extreme, close correlation there between the pound odd and euro odd. All time frames except the week. It's the only one that has a bit weaker correlation. Otherwise, it's extremely close. 0.97, 0.96, 0.97, 0.93, 0.97, 0.98. And the closer to 1, the more correlated. So you can imagine it's really just a tad below 1. It's really very, very closely correlated. So same setup on the pound odd. I don't think it makes sense to say anything else on that. Let's see. Yeah, New Zealand is getting a triangle break to the upside here. Pound New Zealand, that is. A lot of struggle here, and that's probably not so surprising if you look at the AO here on the daily chart. Heading back to the zero line, so you see that struggle. And now that we broke to the upside, we're making that bigger retracement. Pound New Zealand is pretty close to its end, though, of its daily move, in the sense that H5 is pretty close by, and the Euro New Zealand already pushed through H5. Euro CAD didn't get too much follow through to the upside as I was hoping for. Did make some push, but then didn't make that move throughout the session, so didn't get that follow through. Now it seems to be getting that follow through. Pound CAD is also moving up a bit, so there seems to be maybe some CAD weakness if you look at the Euro CAD and Pound CAD. Not sure. Difficult to say. It's a bit early still. How about the Odd CAD? Odd CAD was one. I'm not sure if we discussed that yesterday, but I was looking at it yesterday afternoon, and it was surely looking like a very big likelihood that this could make a tumble. We had the moving averages flat. Moreover, if you look at the divergence between these tops here, we had a very clear rising wedge. Also, if you look at the RSI, for instance, then you can see, for instance, very strong divergence here as well, right? So it was an ideal reversal spot, to be honest, almost. I mean, I'm not a big fan of reversals, but this was a very classical one. Moving average is flat. Also, if you look at the 4-hour chart, what do you see here? Diverges as well between the tops, plus the hourly, rising wedge on the hourly. Plus, if you look at the number of candles, how many candles did we not break this top? 1, 2, 3, 4, 5. That's the end of the impulse. That's the end of a swing high, swing low, basically. Boom. Retracement. What else can we look at? Maybe the Odd New Zealand still. I think that's still one we could take a look at. Wade is saying that your dollar is breaking. Yep, looking like a very nice break. Getting that dollar weakness as expected today. Dollar especially moving down nicely. As well, pound struggling because of the daily high yesterday still. Right, there's a bit of a difference there. Oh, actually, euro dollar had a daily high yesterday too, but it just broke through it. Good. Yeah, there is some danger of divergence. That's why I personally am looking for a pullback still, but I will be keeping an eye on how it breaks. I want to see if we get a good hourly candle here, for instance. The pullback looks better. Let me say it this way. Hans is asking how long I trade generally because he observed the fact that I don't look lower than the 15 minutes all too often. It's true that I don't look below 15 hardly ever. I do occasionally. As maybe some of you noticed, occasionally I do that. It depends if I have a very strong impulse going on. I would look at the 5. For instance, to exit maybe the impulse at the end of the day at the best spot possible using my 5/6 candle rule where we don't break a higher low by within 5 to 6 candles and we're getting close to London close and we know that that the movement is out of the market, then I want to basically exit as soon as the candles stop making lower lows or higher highs. And when they don't do that for 5 to 6 candles, I get that confirmation and that's what I want to exit, that impulse trade. So then I would use the 5. If, for instance, we have, in this case, the euro dollar moving our way, like this, if the 5 gets back to the 0 line here, for instance, like it actually did here as well, that would be a signal for me that the retrace is finished. I would use the 5-minute. Yeah, those are the primary reasons, I would say. Sometimes for a fractal, to know where a fractal is, to know where a smaller resistance or support is for the break of that level. You can even use 5 minutes with the moving averages for dips. When price makes the dips back to the moving averages like this on the 5, could be support levels. But usually I use it more as the day progresses, because at the very start I'm more looking like what is the potential, where's the space of the day, let me say it this way, where's the momentum, where's the potential longer term direction, is there enough space, is it interesting to trade, or is there a reversal going on that has already partly been completed, for instance, or as a reversal with a wide space, maybe like the euro-odd is a reversal, but there's a good space. It's a bit different. And then as the day progresses, then I already know that which ones I'm more interested in, which pairs am I more interested in. Then I would, there's a higher chance of me zooming into lower time frames like 5 or 15, because then I'm already singled into particular pairs and not looking at basically the longer term picture. I would look at the longer term picture again tomorrow morning. Might look at the hourly, right, and 4-hour occasionally, logically, but not at the daily anymore, less at the 4-hourly. It depends. Depends if I take basically trades on 4-hour, hour, and 15. And the 4-hour are more my swing trades, hourly are intra-week trades, and 15 are intraday. The 15 is usually closed within, let's see, within 1 day normally. I mean, there's occasions that it would be kept a bit longer than that, but not more than 2 days, I would expect. Probably, I mean, the very, 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 very max, I would expect 2, but to be honest, I would say 95% of the cases, or maybe even 99, 1 day should be the max. And in most cases, I would expect 6 to 12 hours on 50-minute charts, or not even, maybe minimum 6, I don't know. Anything from 3 to 12, I would say, is probably the most common. But if it's really a strong move and a big runner, right, that's the thing with the trailing stop. If it's a very big runner, it could, you could get up to 15, even to 24 hours. And if it's a really pushes and then starts to consolidate with above a 50-minute support level like this, then it could get extended. And for an hourly, it would most of the time be roughly 2 to 5 days. Swing trades would be longer potentially, right? Because you're using a 4-hour chart, so that changes the whole dynamic. Let's see, I had a swing trade on the Aussie actually, for instance. Let's take a look at that one. I took a buy. It was, let's see, where was it? Somewhere here. Yeah, no, it was actually 2 spots. It was here and here. Upon the break and upon the follow through, let's take the oldest trade, 4th of April, exited that trade, let's see, last week Friday before the weekend close. Okay, so let me put a line here where I entered and a line where I exited. So I had 4th of April, the opening, which was a Friday, held it over that weekend, but closed it before the next weekend. Right here. Closed it here, the red line, opened at the green. So that's about 150 pips. Was a swing trade. Now, why did I close it there before the weekend? Because personally, I saw that this move up was over, in my opinion, at that time. Why? Because we had 1, 2, 3, 4, 5, 6, 7, 8, 9 candles not breaking this high. Everything before that was still one swing high, swing low. But that swing high, swing low seemed over to me. And who knows how far that retracement could go, how long it could take. I didn't want to live through a mega long retracement like that. That's not the point. I'm trying to catch the sweet spots here. So this seemed over. This seemed like a pretty impulsive move down as well. Plus we got some consolidation like that. I was scared for a triangle. I mean, if the triangle would break to the upside, I could still re-enter, right, at a further point in time. If it broke to the downside, then I'm happy that I exited. So that was the reasoning. Now, it did what it did. I didn't re-enter, and it was maybe not the, I mean, could have exited just a bit higher, maybe at the top of this triangle. Then again, I didn't want to stay over the weekend as well, so I think it made sense to exit right here without trying to predict the exact turning spot. I think this was probably one of the better exits one could have because of the fact that I let the currency go as far as it wanted to. Then it just stopped where it stops, and I recognized or thought to recognize, according to my plan, that was over, and thereby just exited at the retracement spot. Roughly, if you put a swing high, swing low, I exited roughly at the 38.2 fib. Okay, how many days is that? That's basically 1 week, isn't it? Exactly 6 days. It's relatively short window on the 4-hour chart. They could be longer. On the odd cat, for instance, I was longer in the trade. I entered upon this retracement here and exited the same day. Also on the 11th, prior to the weekend close, right at this green line. Why? As I already told you about the odd cat, I recognized the divergence here starting to build up. Looking at the higher time frames, didn't expect much of a break of this top, so basically that's where I exited prior to the weekend close. It did have some struggle, but finally did fall as I was scared of, kind of. So that wasn't too much of a profit. Well, it wasn't too bad still. Actually, I think it was about, I did about the 50%. About 90. But that took longer because that was 1st of April up to, that was 10 days. Had to live through pretty deep pullback too before it started to continue up. It was quite a struggle. Bullish wedge where I bought above this fractal here, and I bought here twice. 92.52, 92.80ish, 92.78 or something like that. When we got the bounce here again. As this started to move up here, we had kind of like an ascending wedge under 1 hour as well. As this started to break to the upside here, all right, so let me use the other template. This is a bit busy. So those are good swing trades, potentials. For me, in my opinion, what are the next good swing trades are on the euro and pound, I would say. as if you look at the 4-hour chart, price is above the moving averages, just like the AUD USD was a week ago, or 1.5 weeks ago, and price is trying to break above these short-term moving averages. So it seems to be the same setup here on the euro pound and the pound dollar and euro dollar. Those will be the best ones because, as I said, euro odd, pound odd are retracing, yen is not trending, odd New Zealand are retracing. So to me, the best swing trades are on these pound and euro odd. Here too, we can see 4-hour chart price aligned to the upside, price retrace back to the bounce off of it, now trying to push through it again. In fact, from a swing trade perspective, an entry could be right here, right now. Yep, right here, right now. Stop loss below this bottom though. Breaking this 4-hour fractal. And if you want to trade it with the smaller time frame to exit faster, then you want to trade it maybe intra-week or intra-day. Then you're looking a bit for a pullback. You want to see how it breaks first. It's looking good though. Let this candle close in 2 minutes. Wait for a small dip maybe. Wait for the 5-minute chart to go to the zero line. And that could be a dip for upside. So any questions, folks? Euro dollar nicely breaking out. If you want to take that swing trade, you might want to maybe wait a bit. I mean, not wait, but you can still put a pending order at 40, 138.40. Probably make those few pips dip. Could even be an entry order now. All of this is entry zone because you're using as a swing trader, you're using anyhow a wider stop loss. You're targeting 143 or something like that, and trail stopping every 1 hour, 4-hour bottoms, right? So there's really it's a different approach. If you're trading the 50-minute chart here, you, or I at least, personally, would be waiting for the hook back. Now, we're never sure if we get the hook back, but especially break of this daily top, I want to see that daily top break first, then see a hook back here before taking it, personally. That's what I'm waiting for. If it doesn't happen, then tough luck. But it's different from a swing trade position. Now, obviously, if you, as a swing trader, still manage to get it lower somehow, right? If you took it here, the better for you, right? Then you're already up 30 or 30 pips. But technically speaking, it's good, technically the break of this 4-hour indicating the most likely end of this retracement. Well, folks, I guess I shared what I wanted to share. Any questions, maybe? Thanks for your questions, Hans. Myself, euro dollar, pound dollar, dollar Swissy, euro odd. Dollar CAD could also be interesting, but want to see how the CAD responds as well. Pound odd too, by the way, same as the euro odd, right? Maybe the dollar yen. I don't know if it's the dollar yen is quite wacky. So it is up, but it went back to resistance. It's more of a reversal idea, but because it actually tried to, it's moving back to moving averages. It had a good run up during the day upside. What could happen is that it kind of like gets exhaustion, and throughout the day it might make a fall again, back to this level, and go then sideways again. Not that it's a trending trade. I like to keep an eye on trending trades, but kind of like a reversal, intraday reversal idea could be on the yen to the downside. But that's a risky one, in my opinion. Riskier one. But yeah, the idea is basically intended on the fact that we have this momentum up, but we just fail with that follow through. Where the pound dollar could reverse. Well, we got as I said, it looked like it was keeping its heads up for an upside break. It did do that. So I don't think my pending order makes sense anymore. So I have to adjust my plan, unfortunately. I just had was thinking about the fact that maybe an entry order right here could make sense. I don't like taking entry orders in consolidations like that. I'd rather wait for a break or dip. But in this case, I had some doubts maybe if it would get there. Still left it. Let me put it went down to 13. It's a shame. Missed it by 7 pips. Anyhow. What can you do? So I think that this is probably the reversal here right now. I don't think it's going to get lower anymore. So this is looking like the reversal. I don't think that we could I think I will have to delete my entry order there, and we shouldn't expect a reversal from lower anymore. What we now could expect is, I think, follow through to the upside. So I'm looking for dips to buy. Now, how far could this intraday, if bullish environment go? Well, I think one thing we can do is put a fib on this swing high, swing low. A pausing spot could be the minus 272. But then we should probably see upside to minus 618 again. So it depends what kind of reversal you're looking for. If you're looking for a small reversal, that would be these targets. If you're looking for a bigger reversal, then it's going to be all the way probably at 169.70, 170. If I have my fibs correctly. This is looking like a bullish setup, so I wouldn't be looking for a downside reversal anytime soon, personally. Looking like a bullish day. Only thing what could happen is maybe at the end of today, right, when we have a bullish kind of close like this, most likely, then we'll see maybe tomorrow some retracement of today, and then probably again follow through. I don't know exactly which side you mean with reversal. Do you mean reversal back up or reversal back down? But I think I've answered both. So now, there will be some pauses down, but I don't think the potential of those move down don't seem to be very much at the moment. Not to say that we couldn't get a decent retracement to the downside, but personally I think there's more space in a sense to the upside, because that's with the flow, that's where you would expect more follow through. So it will be easier to trail stop a trade to the upside because you can expect higher highs and higher lows. At the moment, at least. All right. I hope that makes sense, MJ. You can always, if you're looking for intraday reversal to the downside, I would be very careful with that. But you can always use an RSI or these pivot points to find some resistance spots. And H4 is one of them at 167.76. Alrighty, folks. Well, thank you so much for your questions. Thanks for being here. And always good to see you in this training room. And for your questions, of course, that I know everyone is looking at the charts with me, so that's always good. So we'll be back tomorrow. Well, actually, Nana will be back tonight with his expert advice, but I think he's taking a look at price action. And then tomorrow we have our usual trading room webinar, but we don't have one in the evening because that was yesterday evening. So Thursday evening was canceled. That was yesterday. All right. Have a great trading day, and see you soon.